Welcome to Industry Insights with Route Consultant, your front row seat to the fast-moving world of logistics and beyond. Each week, we bring you game-changing insights, real-world strategies, and fresh perspectives to fuel smarter investments and build stronger businesses. Join us as we sit down with expert guests to explore emerging trends and pressing topics across a wide range of industries. This is Industry Insights. Welcome to Industry Insights. Today we have a fun one. A lot of the times you might hear us at Route Consultant talk about FedEx, but there are a few other industries that we deem just as important. We have buyers and sellers come to us all the time. And today we want to highlight two of those, Amazon and bread distribution, which are two industries that you may not necessarily put in the same conversation, but there's actually a lot of similarities. And so we're going to unpack all of that today. We're going to talk about the model, the startup costs, the lifestyle and day-to-day, so that if you're looking at either of these, you can start to figure out which one's the best fit for you. And joining me, I have two experts in this space. I have Luke Price here to represent the Amazon side of the equation and Stephen Rhein to talk through the bread distribution model. So Luke, Stephen, welcome.
Thank you.
Yeah.
Glad to be here.
Yeah.
Thanks.
And I guess just as an easy way to start, if you guys each want to just give, a quick background on yourself and then talk through a little bit, if somebody's never looked at one of these spaces, what's just a high level elevator pitch on Amazon and bread? And we'll let you go first, Luke.
Sure. Yeah. Luke Price, FedEx and Amazon broker here. Spent all of last year solely focused on Amazon routes. So It's been a great space to learn about, a great space to kind of start my route consultant career with. And yeah, it's a great business model. They say FedEx is a delivery company first, that's figuring out technology second. And the opposite is true for Amazon. Technology company first, delivery company, they're figuring it out. And so at a high level, I would say Amazon owners are typically very highly involved in their business. They're very detail-oriented. They are communicating with Amazon on a regular basis, and they are managing a large operation, a larger operation than average or than what other silos might be used to, and they can do very well for themselves. It's a great business model.
Awesome.
Yeah,
Stephen?
thanks. Stephen Rhein. Been in the grocery business my whole life. I jumped onto a bread truck right out of high school. Went on to buy my first route in 2009, grew to a multi-truck owner, have done a lot of other things, all while owning bread routes, have experience in construction, flipping houses, even did some franchise sales, in-home sales, and learned a lot from that experience. Have recently transitioned over to the route consultant team to share some of that background and educate buyers on the grocery space and how I really believe it's a unique opportunity and an overlooked one that most investors don't know about. The stability in the space, the protections are really unparalleled.
Yeah, perfect. And, that's what we're trying to dig into today. I think even the people who have heard of Amazon don't necessarily know what that is like, what the actual model is like. And we say bread. Bread is a big category. Grocery is a big category. So for each of you, let's just start here. When we talk ownership, when you say I own an Amazon business or I own a bread business, what is it that you own? And we'll have Stephen go first this time.
Yeah, thanks. In the grocery space, what you are buying is the distribution rights to a respected product within a certain territory. Those can come in an exclusive manner, depending on whether it's branded versus non-branded. But you being the service provider in the grocery space allows for a lot of confidence in knowing that you're walking straight into a business with revenue from day one. You don't have to source customers or even pay a marketing budget. It's brands that consumers are well integrated into their daily buying habits. And so that's one thing that I really like about the bread space that sets itself apart, is just the ease of entry.
Okay. And the customer, we say, bread, but who actually is it that you're contracted with typically?
Contracting with the bakery. Okay. Customers would be your major market retailers, Walmart, Kroger, Publix, Food Lion, all the way down to maybe even a Waffle House.
Yeah. Okay. Yeah. And how many bakeries do we see? Are there a bunch big players in the space? What does that look like?
Yeah, across all categories, we see 15-ish contracting companies. That could be bread, chips, tortillas, snack cakes, just about anything that has a short expiration date. The business model really benefits greatly from that local incentivized distributor to manage that inventory well.
Yeah, and I think that's important for people when they're thinking about like, what do I own? What are my options in this grocery space? Is that where you are, there's probably several bakeries that are operating, if not every bakery that's operating in your area. So there are a lot of different opportunities, and it's more about trying to find the right one for you as you're trying to enter this space. But there are a lot of options, not just like in the Nashville area, one guy delivers all bread. It's, it's a variety of things across a variety of bakeries.
Yeah, we see about 5,000 distributors in one, brand category. So if you multiply that out, there's quite a few.
Yeah, perfect. And I think that does start to illustrate what you were talking about, how there's a lot of opportunity here and a lot of people just haven't really understood what the model looks like. So let's move over to you. I think we know who the customer is, but what is it that you own? Like what is your kind of the model here for contracting with Amazon?
Yeah, I'd say fundamentally with an Amazon DSP, what you own is probably the volume share in your specific station. So the simplest example I could give would be someone saying something like, I have 14% volume share in the South Nashville terminal, just making up a terminal for conversation. But that would probably translate to say maybe 25 routes or so on the Amazon side, which is in the Amazon world is somewhat small. Average to small, I would say, is 25 routes. And so you would then have anywhere from, I would say, 25 and maybe 35 trucks that are leased, typically directly from Amazon, to hopefully not go too deep on their business model. And you've probably got twice as many drivers on payroll as you do routes in this space, since Amazon is prescriptive, telling you how many routes to run. And so going back to my earlier mention, it is a larger operation. But yeah, most fundamentally, it is volume share that you, so to speak, own with Amazon.
Okay. Yeah, and as we start to dig into more of the operations side of thing, I do think that there's some really important comparisons to draw there versus for what's expected of you from each of these. So what does day-to-day life look like for the average Amazon contractor?
Yeah, I'd say for the average Amazon contractor, there is a lot of interfacing directly with Amazon and keeping in tune with their different programs, their different metrics, their different expectations of you in terms of, again, when you have that large of a fleet and those trucks are constantly coming in and out of service, having to typically lease those trucks often directly from Amazon. There's a lot of coordination as well on the fleet side, hiring, everything, the whole, kind of tide rises when the operation gets larger. They typically have several managers, oftentimes a dedicated fleet manager, for example, when the biggest business is big enough to justify it. So Amazon also, in the first 6 months, will ask you to be in the station 7 days a week. So they want you very involved, learning every inch of the business. And frankly, post 6 months, as that owner is scaled and that performance is at a high level, they are able to take more of a step back. But they certainly want you highly involved, especially early on.
Okay. And when you say they have to be there, is it the whole day? Is it a couple of hours? Like, what does that standard over the first 6 months look like?
Yeah, I haven't followed up with some of our past buyers in terms of what actually was required. Yeah. However, in the first couple stages of the Amazon interview, they're going to ask 7 days a week, 12 hours a day. Are you willing to do that? So, I mean, like many jobs, right, when you are interviewing, especially when they're highly, highly selective jobs, showing that you're willing to go the extra mile or extra several miles in this case is crucial. And so I've had owners talk about, in their early days, they were turning wrenches in terms of how involved they were and literally learning just, truck maintenance, the ins and outs of hiring and keeping that bench warm and flowing. So it truly is every inch if you're drinking the Amazon Kool-Aid.
Yeah, perfect. So on the flip side, what are we seeing day-to-day life look like for the bread space for a new contractor or somebody who's been there for a while?
Yeah, day in the life on the bread side really is probably what you would expect. Loading a truck with fresh product, delivering it to the grocery stores, removing out-of-date product. Really the core competency in the grocery space is managing a fresh inventory. So you think about seasonality or even promotional cycles through holidays. We're about to hit Thanksgiving, right? Number one food holiday of the year. So you're going to buy way more dinner rolls, the third week in November than you would in January. So understanding that is really critical. You can lose a lot of money fast if you don't understand the promotional cycles revolving around the grocery business. And so if you're going to get into this, it's really critical that you manage the inventory, adjust your orders. And on the flip side to that, you can make a lot of money really well.
And, Luke mentioned 7 days a week. Would you view this as typically you're involved 7 days a week in bread as well?
Yeah, the grocery business is 7 days a week. Mm-hmm. Sunday is the number one shopping day of the week. You see typically about 60% of your weekly volume happens between Friday and Sunday.
Wow.
So staying active and busy in the market, that doesn't mean that your drivers or yourself has to work 7 days a week, but you need to have a game plan to make sure the stores are in business and looking good every day.
Yeah, I always think it's funny, as you're looking at different industries, how different parts of the year and different holidays stop being the fun parts of the year. So, in the bread space, it's like, it's 4th of July. It's every holiday that are the days that we all look forward to are the ones where often people are buying the most bread and the most food, where you have to over prepare. And then Amazon, Black Friday, and then Amazon likes to do all of their fun little Prime days, which are great for us to get the deals. But as an Amazon contractor, that means your next week is exciting, to say the least. So it's always funny to see how holidays change their meaning depending on which industry you're in.
Yeah, and that's one of the advantages to the grocery space is you have a lot more control over top line revenue and really capitalizing if you understand consumers' buying habits, that seasonality component, and you can come in and really drive revenue. And conversely, if you don't, you can kind of run it down. So you have a lot of control. The local population base is your customer, and you need to serve them well.
Yeah. And we'll talk about a little bit more on the growth side later of what does life look like when you're beginning versus what does life look like if you've grown both in Amazon and bread, because we're talking kind of averages, but there are obviously different size businesses you can have that can dramatically change what your lifestyle looks like. So just at a high level, when people are thinking about these spaces, what are kind of the typical margins that they can think through, and conversely, what they often sell at, just for them to start to wrap their heads around it? And you can go first with Amazon.
Sure. So Amazon being larger than average, when I say average, right, people familiar with Route Consultant might be thinking anywhere from like the 5 to 15 route size in terms of the businesses we sell. But the average Amazon business, at least based off the contractors I've interacted with, seems to trend around, I would say, at minimum 25, I'd say maybe 25 to 35 route range as an average band. And so it is a larger operation, and Amazon is very drilled in to understanding how much, of course, they are paying their contractors, but also what their contractors' expenses look like. So they keep margins relatively trim. I'm going to say around the 8 to 15% range on average. I have seen some that are higher than 15%, but that's typically where you're going to see those margins. And whenever you hear margin in the Amazon world, think scorecards. We talk about, and Route Consultant does a good job of educating folks on what all those entail, but those really kind of go hand in hand. And I'd say 8 to 15 to hopefully put it simply.
Cool. Steve?
Likewise, yeah, probably high teens in the grocery business. Again, there's so much nuance across bakeries and commission structures. I think 15 to 20 is a reasonable expectation.
Okay. Yeah, and I think that just helps people start to conceptualize, regardless of the revenue, what can I expect for normal? What does normal look like? And part, I know, of normal for Amazon, and we'll talk about it too with bread, is, what are the metrics that you're trying to stay on top of that they require of you? So I know Amazon has a set, the scorecard that you just mentioned, and that impacts revenue. So what are some of the things that they're holding you accountable to as an owner?
Yeah, so at a high level, I would say scorecard and capacity, they call it capacity reliability, is basically the same thing as the two main buckets. Scorecard is a very detailed analysis by day and by driver of everything from whether their seatbelts are on, whether they're speeding, are the packages dropped off in a timely manner. They have a Netrodyne driver monitoring system on board, taking their eyes, off the road, those sorts of things. And so hitting scorecards is everything in this business, and it's on a per package basis, 7 cents or 15 cents for Fantastic and Fantastic Plus. And on the capacity reliability front, that is all around signaling like your ability to grow and your ability to execute on what they're giving you in the first place. So again, 25 routes for easy math. Let's say you put out 26 routes on a regular basis of those 25, right? Someone else in your station needs help picking up a route. Your capacity reliability score would be 104, 26 over 25 as a basic example. The insider info I hear from contractors is in Amazon world, 100% is kind of your floor.
Yeah.
Think of that as kind of the baseline to work upwards from. And again, signaling, hey, I've got 25 and I'm consistently hitting 27 if you've got more routes, send them my way to move that volume share up.
Yeah. And it is one of those things with Amazon, just to emphasize what you said, that the 7 cents, the package and stop bonuses tied to the scorecard are additional revenue. And some of the best contractors, to have the higher profit margins, you have to be hitting those scorecards.
That's right. People say if you aren't hitting scorecards, why even bother being a DSP? Amazon is so drilled in and so savvy in terms of what you're paying for everything up and down your P&L that on average, if you aren't hitting scorecards, you're probably breaking even. And that's a whole lot of work to just be breaking even.
Yeah.
So,
Yeah, and we'll talk a little bit more about that when we're getting into it later. But I do think that kind of shows both of these industries require a lot of you and your time investment and what you need to be doing for the business. On the Amazon side, for you to be successful, you have to be hitting every metric that Amazon's requiring of you. Like that is, they have set a model and you are hitting it, or you're not making a lot of money. That's kind of how it works.
100%.
So, Stephen, how do you think about metrics? Like, what on the bread side, what are people shooting for? What is that model?
Yeah, great question. So on the grocery side, the most important thing right now is fulfillment. We're seeing the grocery business pivot to an online model where, customers are buying products online. And if they can't fulfill those orders, there's data points now on lost revenue, which is great for contractors because that allows you to see, what you're missing. And it's also a two-edged sword, right? Because it's really hard to hit a 95% fulfillment rate or a 98% fulfillment rate, especially in a grocery business where you're dealing with a short shelf life. So you're always, searching for that Goldilocks, that not too hot, not too cold, tiptoeing around, not too much stale, but not running out in the store. And that's really the hardest aspect of this business. But the flip side to that is the demand on the product is exceptional. Bread, milk, and eggs are the catalyst items that initiate a grocery visit. So you're walking right into a business that if you can perform well and hit some of these KPIs, you can make a ton of money.
Yeah, and so for both of these, there are metrics that they're illustrating the path, and your ability to hit it is basically the way you make money. Amazon requires it. When we're talking about bread, do you feel that the bakeries are as strict there as what we're seeing from this model? Like what does that top-down approach look like from them?
Yeah, each contract is different, so it's important to make sure you know what you're buying and how the language is written into that. But the retailers are really the ones that are pushing this agenda.
Everybody's subject to Walmart.
Without question. They're the number one retailer in the world. So stepping right into a business with Walmart as a customer is tremendous. The opportunity there is huge. But they're also the biggest retailer in the world, and so they have a lot of standards that are exceptionally high. So thinking through that, if you're going to get into the industry, have a game plan that there's not much room for a poor contractor anymore that's going to drive revenue down. If you're not managing your inventory, if you're not ordering based on seasonal drivers, promotions, you're going to have a lot of phone calls, a lot of problems to overcome. But if you understand that and you think as a consumer would when you just go into the store and you buy bread, it becomes very second nature. So with time, with diligence, with perseverance and working with excellence, it's very achievable.
And I do find it very interesting how retailers are changing how contractors have to work in the grocery space, because a lot of the times when I think about grocery traditionally, there's a lot of the contractors had a pretty loose relationship in terms of they had full flexibility to they own the territory and they could get it done their way. But I see how strict a lot of the retailers have become to push the volume that they need online. And that is really changing what a good contractor looks like in this space, which opens up a lot of opportunity. We'll talk about it when we get to growth. But I do think it's interesting to see how business-minded strategy is becoming more and more important in this space, and that's something not every traditional grocery contractor knows how to do.
Yeah, I mean, believe it or not, Amazon has been somewhat of a catalyst here in this industry. When they bought Whole Foods,
Yeah.
All of a sudden, a online retailer just got brick and mortar stores nationally, and the big boys, the Krogers, the Walmarts in the world, didn't want to lose any of that market share, right? So there was a very aggressive ramp up to online shopping and marketing to that customer, and fulfillment ties back in with that. So understanding the retail environment, in my experience, goes a long way in understanding the why. And that goes for managing employees too. Understanding their why is really critical in running a good business.
Yeah. It's becoming more and more where each of these industries, and Amazon's been this way for a while now, but there are metrics to hit, and your ability to hit those is really going to dictate both your future with the company, your growth potential, and also the margins that you make. So it is interesting seeing how some of that, it's funny even that the fact that Amazon drove some of those changes to see some of that start to happen over the course of time. Hey guys, we just wanted to pause for a moment to invite you to our free events that are happening throughout the year. Whether you're just getting started in the logistics industry or you're looking to optimize your current operation, Route Consultant has events that are designed specifically for you. So head on over to routeconsultant.com/events or check out our show notes to register for free today. Also, while you're here, don't forget to like and subscribe to the Industry Insights with Route Consultant podcast so that you don't miss out on the stories, the advice, and the updates that are happening throughout the industry. We appreciate you being here and hope to meet you in person soon. Now let's get back to the episode. So let's talk a little bit about if somebody's getting into one of these spaces, what the process is. So we can start with you. Like, what when you say the Amazon process of if you're trying to either apply to Amazon or buy one of these, what's kind of your timeline and startup process look like?
Yeah. So if you're trying to start from scratch or trying to apply directly into the Amazon DSP program, a pretty straightforward and easy process to initiate. I liken it to, buying a empty plot of land and building that home versus buying something that's move-in ready. So there's a long line to get onto that Amazon bench. If we're talking about the empty plot of land, I would have to guess thousands upon thousands of people have been, so to speak, pre-approved by Amazon. They just don't have a spot for them right now. The DSP network is still growing. If you're thinking about like a heat map of DSPs across the country, such that maybe you're in Nashville or Raleigh or Austin, one of these very competitive, highly desirable markets, and you're on the bench, you are probably more likely to get a call or an email from Amazon, maybe a few months. Sometimes I've heard a couple years, or at least a year in fairness, after you get pre-approved and say, hey, we're full on Austin, but what about North Dakota? Or, what about Idaho? And that is kind of how they're trying to spread the bench geographically. Now, if you're trying to buy one of these businesses, what I encourage people to look for is a few things. One, you need to be within 50 miles of the business. Amazon will ask. They will also verify it in the background. Fully involved, going back to that 7 days a week, 12 hours a day. They're also going to check if you have any current affiliations or current occupations. So being an owner-operator is essential in this space. And it needs to be basically just you, not, Josh, Stephen, and Luke Incorporated, just Josh Incorporated going after this business. And then finally, I would say cash deal. We have tried in the past to get other kinds of deal structures done, but through and through, they want all cash at close, and for you to be able to show those funds in an account with your name on it before they approve the deal.
Yeah. And we'll talk a little bit more about capital and financing, what kind of capital to expect. So if you do go to buy one of those, let's say capital's handled, you've got that all good and you're good with the seller, what is the Amazon process to actually get approved after that?
Yeah. So ideally, you've got a signed agreement in place with the seller, and the seller submits you into Amazon, which tends to give your application some priority in the queue. And then Amazon's going to say, hey, very competitive. Here are the first couple steps. Oh, by the way, we're going to take it minimum 14 weeks to approve you. Multiple stages, multiple areas of your application in which they're vetting you. You do need to be at just squeaky wheel gets the grease in terms of periodically following up once you're able to connect with humans on the other side with the application. So it's long. It is fair to describe it as a war of attrition, maybe, just in terms of how many applicants they're filtering through. So by and large, it is it's the persistent that I see succeed in the application, along with meeting the other criteria we talked about.
Yeah. And we'll talk about training for both of these a little bit later, but after the approval process, I understand there's some period of training leading up to the close as well.
That's right. So no matter where you are geographically, Amazon's going to onboard you both at your terminal alongside your seller. Mm-hmm. They're even going to actually bring you, in our experience, out to Nashville for some training, not too far from our offices. So, yeah. We can get lunch. I've done that a couple times with some guys this year. And so, yes, they are very, very data driven. They're very system driven with their process. And so they are not going to just throw you out there willy nilly. They're going to plug you into the system and work you through an onboarding that will take approximately, as best I can recall, 3 to 6 weeks maybe.
Okay. Perfect. So 14 weeks, going to get approved if you check all the boxes and Amazon says yes, and then 3 to 6 week training, and then
That's
you're up and going.
That's
okay.
right.
So let's talk grocery. Thank you for correcting me. I keep saying bread. We don't want to narrow what's possible here. So talk me through that process.
Yeah, I mean, similar to Amazon, starting with a purchase agreement, if you're working with an independent seller, making sure you button up all the loose ends on the transaction and thinking through the due diligence material. There would be an application. You would likely have an interview with an area sales director or market vice president. In that interview, that they're really looking for an understanding of the unique aspect of the retail environment, making sure you understand that the demands on you, and thinking through stop-loss measures. If you're leaning toward multi-truck or intend to utilize an employee, how will you service the business and meet the retailer expectation when you have someone call out or, break an ankle, or solve problems. Because at the end of the day, again, like we talked about, stepping right into a customer like Walmart, they expect service and they expect to be in business because they have so many people walking through their doors every day. So after the interview, once you get approved, probably a 4 to 6 week onboarding process to get you, set up with handheld computers, integrated into, each company's online portal to submit orders to the bakery. And then you would end up closing on the business. Everything would be transitioned into your name. You would form an entity and then close the deal.
Okay. So for both of these, what I'm hearing is, there's an interview process and there's a decent amount of training. That's very different than FedEx and a lot of the other industries that we look at, where the customer is requiring you to know certain things, but they're also facilitating those steps and helping you along some of the way so that you've got some on the ground training, so that I think once you've made it to stand, once you've made it past the interview and you've gotten to training, like, you should be ready to go. Like, they're actually making sure that you're ready to operate. And so in both of these, a lot of that is similar, where there's a lot of, the date, they're requiring a lot out of you. There's metrics you have to hit. I think one of the biggest differences that we've only slightly touched on, and you mentioned it when you said cash, is what is the typical price to get into one of these that we see a transaction happening, and are they financeable? And we'll start with you because I think you said already, we're looking for cash, typically not financing is what it sounds like.
Yeah, that's right. So average Amazon business is going to be anywhere at 1.3 to 1.5 times their EBITDA. Mm-hmm. So it's all based on what the business nets. And I believe our average Amazon business right now is priced at around $1 million. And so that's a good chunk of change, make no mistake. And I always try and clarify, right? It is never the seller's requirement, nor is it certainly not route consultant's requirement that it be a cash deal. Amazon will ask the funding strategy, as I mentioned. They will ask to see the funds in the buyer's account prior to. So they're very selective on that front. They, as best I can tell, when people ask me why it's a cash deal, I first say, I'm just the messenger. I've seen lots of trial and error on this front. But as best I can tell, they seem to view any kind of debt as a form of risk, or as maybe some sort of extended obligation to these owners, when ultimately it is a unapologetic meritocracy with Amazon. It is scorecard capacity week in, week out, hence the cash requirement.
Yeah. And you can understand it from Amazon's perspective, and they want who they bring on to be successful. But at the same time, I think it is really important to be upfront about that. And, it's not route consultants, not banks. Like, honestly, a lot of banks are pretty thrilled by some of the numbers and the cash flow they see from some of these operations, and would probably finance a lot of these. It's more of a requirement from Amazon in the way that they're viewing this structure. And so things could change, but that's a lot of what we're kind of looking for when we're expecting somebody to get through the process. Is there's a lot of similarities in operationally what you're being held accountable to. There's differences when it comes to size and scale that we'll talk about. But one of the big differences here is that Amazon is going to require a pretty hefty amount of cash that you have to have up front, and there's not a lot of options there beyond that. Hopefully there will be in the future, but for now, that is, if you want to get into the Amazon game, that is the barrier, the wall you got to hop over, right?
That's right.
Yeah.
And if we talk about what's, so to speak, below the line in terms of cash flow, right? It's debt, it's CapEx, owner's wage, roughly speaking, but trucks are pretty much leased, so that the CapEx requirements are quite low. Mm-hmm. There's no debt. So yes, the hardest part, far and away, in the Amazon world is getting that approval. But once you're in, yes, the opportunity is pretty life-changing in terms of the financial picture. So.
Yeah, it's just that first step, and we're happy to help, and we will do whatever we can. Right. That's what Luke does day in and day out. But yeah, that is a wall to clear. So capital-wise, financing-wise, what do we see conversely on the bread side, the grocery side?
Yeah. So grocery side, routes are probably going to start around $80,000. Okay. They can run all the way up to $400,000 or $500,000 depending on volume for one contract. Mm-hmm. Typically, there is financing available. These deals are hard to get through the SBA because there's not a lot of collateral behind them. These are distribution contracts, and so what the industry has evolved into is most companies will have some sort of in-house financing. They know the value of their brand. They know the value of the relationship with the retailers. As an example, Wonder Bread has been around since 1924. So, these are brands that are deeply rooted into, consumers' buying habits, and they see the value in that, and so they offer financing, and that's a profit line item for them. So, 10 years is typically the term. Typically easy with 10 to 20%. Can see them a little higher depending on the demand for the route and what they consider, to be a premium route. So a lot of nuance in the space. Allow us to walk you through that, and no two businesses are the same in the grocery business.
Yeah, I think it is really important though to just emphasize that because of Bakeries being willing to finance these, that most, if not all, that we will put up on the market are financeable to some amount because the bakery is willing to kind of step in and enable that process.
Yeah, that's right. There's some criteria there. You need to be a U.S. citizen, about a 650 credit score, be able to get your own entity. Beyond that, as long as you have no bankruptcies, pretty easy approval.
Yeah, and I think like we talked about, it's really important as a buyer that we help kind of delineate these in terms of what's required of you from a capital perspective, because they're both great opportunities. And I think both of these systems are set up in a way where once you're in the door, there's a lot of things that they've trained you on to make sure you're successful beforehand, and a lot of metrics that are really clear that what you're held accountable to. But there's just not everyone has the capability of having $1 million in cash. And so I think it's really important, if you're thinking about the investments and getting into one of these, that like if you have that, go for Amazon, see what your options are. But if you don't, it's just important to not waste a bunch of time looking at Amazon. And I think that's something that I always like to, when we're having these types of conversations about different industries, to look at, know what you've got to bring to the table, what's a stretch and possible, and what's out of the question. And I think that's always important so that you don't waste time or energy. These are not, this isn't going to buy like gum at the store. This is a life-changing amount of money on either one of them. These are big businesses. This is where you want to invest your time and energy for decades to come for a lot of people. And so you want to make sure that you don't waste 6 months walking down a path that's not the right path, that was never going to be an open path to you. And so that's part of what we want to illustrate here in a conversation like this. I think one other thing that we haven't talked about that I'd like to just touch on is, what does growth and scale look like in each of these industries? And we'll start with you this time, Stephen.
Yeah, so, unique to the bread side, you can buy one route. You can buy 10. So the business will meet you wherever you want. I've talked to a lot of guys leaving corporate America. They don't want to manage employees anymore. They want to be self-reliant, or maybe look for that retirement route with a low time commitment, something to keep them busy. So you can buy one if you want, but you can also grow, scale, looking at areas that have a lot of migration to them, maybe a lot of homes being built. That's going to be an area that's going to really prosper over the next 10 years. That's where you can build a route, win market share, win with new product offerings, grow and split a route, from one into two. If adjoining territories become available, you can purchase those. I have talked to several clients over my years that have routes in multiple states. It really comes down to your comfort level, your willingness to manage employees, and the understanding of the operations, the unique nuance, and how you're going to overcome those hurdles.
Yeah, and I think there's plenty of people that don't even know that it's possible to own multiple routes in the bread space. And I know there's plenty of contractors in the bread space, in the grocery space, that don't know it's possible to own multiple, even though they've been in the space for 10 years. So I think that's an important thing to think through, is that those opportunities are there. And part of it is bakeries are continuing to realize that it is a possible strategy, and that they're supporting it and helping contractors achieve that.
Yeah, and there's a lot of research into metrics, and they're finding that the multi-truck guys are the most profitable. They've built some redundancy into their business, maybe similar to Amazon. They've moved into, having managers and trainers on staff, and, they've gone from working in their business to on their business, and they've really hit that stride where their weekly output maybe just a few hours, and they have a well-oiled machine, and they never have to worry about marketing. They never have to pay a royalty to a franchise company, and they're serving the local population there with a product in extremely high demand.
Yeah, and talk a little bit about not just growing to add multiple routes. Let's say you just have one, or if you have multiple, can you grow the revenue on that existing route to control the top line?
Yeah, it's important to look at your contract and see what you actually own, right? So if you have a very large footprint in, say, a fairly rural area that's growing, I can think about a listing we had in South Carolina. There was a 3,300 acre development that was in the works. This was a master development plan, looking out 15 years based on what they had seen, the market demand for real estate there. And so if you have a really large footprint, know that, you could potentially have a legacy business that you could grow and split into multiple different trucks. It may take 20 years, but you have to have that foresight. And then conversely, if you're looking for that retirement route, maybe just a little, footprint in Southeast, Florida, you see a lot of retail, built into vertical housing complexes. So you have a lot of people in a very small, densely populated area. Those routes may be harder to grow just due to the footprint that you own, but the business will meet you where you want.
Perfect. So let's talk about it on the Amazon side. So 25 on the small end, you said. How large do we see these getting? What is growth? How does Amazon treat growth?
Yeah, the average operation, for what I've seen, can get north of 50 routes, just depending on number of contractors in the area, similar to as you were describing the growth of the market it's servicing. But then if let's say the average operation is in that 30, 35 range, if you're talking about adding on from there, the easy answer is, whether it's the 25 to 50 range, Amazon wants you to have pretty much just one DSP. I think the Chick-fil-A franchise model comparison's fitting in terms of standing behind the counter, taking orders. Amazon world, right? It's turning wrenches, getting to know everyone, being very present and involved. So that's the easy answer. Other programs and other opportunities I've heard contractors talk about would include the Pinnacle program, as they call it, which I believe is like the top 3% of the network that become eligible after a few years of a second site, which is exciting. There are also things called pop-ups, right? So temporary work. We see this in other sectors as well. Temporary work in other stations where they need help. I think the industry term for that might be TCO. Don't ask me what it stands for, but that's just jargon I hear DSPs throw around. So those are some other ways you can add additional work after several years of pretty solid performance. This is not a year one sort of reality. I've also heard of contractors talking about how those second opportunities need to be vetted in terms of, okay, they're offering me this second operation, but to your point about efficiencies and redundancies, right? At times it can be as much work and not as much payoff, despite you being at the top of the food chain.
Yeah.
And then the last thing I'll throw out is just given the aggressive nature of Amazon and its constant growth, and I mean it is a fully integrated fulfillment company. So there are multiple sectors of the FedEx fulfillment network where I've heard DSPs can get tapped. This is kind of relational and probably at the regional, maybe even kind of the national level. But the top DSPs can get tapped for other sectors of the business. Again, I'm not going to say any year one or year two guy or gal can be eligible for that, but it just, I think, speaks to Amazon being so performance driven that when they see good talent, they want to replicate it.
Yeah.
But by and large, new investors, new operators should focus on their one operation and growing it as best they can and maximizing scorecards, right? Yeah. Because if that business is 50 routes, but you're only hitting scorecards every other week, the 25 route guy who's hitting Fantastic Plus every week is probably making more money than you.
Yeah.
So bigger does not necessarily mean more profitable in the Amazon world.
Yeah. So there's a lot of cash to be made, but it all comes down to, regardless of the size that I'm in, am I hitting the metrics? Yep. And if you are, not only will that lead to you making a lot of money, but that also opens up your opportunities to continue to grow at the terminal. There may be some other options, and obviously Amazon could always change how they feel about multiple locations over time. But even if it's just going from 25 to 50, if you're still able to hit all of those metrics, you're doing very well.
That's right. That's right. And not to try and cross-sell anybody here, but if folks do, reach a relative ceiling in their Amazon world in terms of growth within that network, it's throwing off enough money and you are operating at a high enough level where you can be successful in other areas. So I'm working with FedEx investors right now who are current DSPs trying to become FedEx contractors, and they're great to work with. They really set themselves up for success in other areas, other silos.
Yeah, and I the same would apply for the grocery space. I mean, if you're already used to being there physically and used to working on the business and you've got this cash flow, I have seen that as like a lot of contractors that view their DSP business as their cash cow, and they use it to go out and invest and grow in other businesses because maybe they've reached that ceiling with Amazon, but they've got energy, they've got time, they want to go out, and I've seen plenty of people make those transitions as well. And so I do think that's where I want to kind of leave the conversation, is that when you're looking at the logistics space, there is no one size fits all model. And it's really important to understand what you're walking into in each of these, what you think you're capable of from a time perspective. Both of these require you to be somewhere physically, require your time. And so that's already a different category of investors. Not everybody is in that bucket where they actually have time where they want to dedicate to the job. But for those who are and are looking at these, they're both excellent opportunities. But if you can't be there physically, or if you don't have $1 million in cash, Amazon's probably not the right path for you. And so it's important to know that that's not the end. That doesn't mean that there's no path. We have a ton of different opportunities. I think grocery in itself has a ton of different options within it. And so what we're always trying to do with these conversations is help people understand what their options are. We will talk to you about any listing we have, any questions you have on either of these industries. I know Luke and Steven are here to answer any and all questions people have, as they've answered my questions all day here today. So if you have questions about Amazon, if you have questions about the grocery space, if you don't know where you fit, hopefully this conversation has started to illuminate some of those and you can start to self-identify. But if you do still have questions, that's what these guys are here for. And so Luke, Steven, I really appreciate you being here and answering all of these questions. I do have one more for each of you that I require of everybody who is on here. So for each of you, answer either what is your favorite book or movie that you have read or watched recently. You can answer either, You can answer both, but you got to answer one. So who's got an answer first?
Yeah, I really enjoyed early on in my career, a friend gave me the book, The Go-Giver. Very short read, applies a lot to the grocery business.
Okay.
Great for personal development, very easy book to get through. So that's my advice.
Okay, easy one. Okay, short and easy, but impactful. All right, Luke, what do you got?
So on the book front, one that comes to mind, Larry McMurtry's Lonesome Dove is a classic. Nice. Large book, a very
not short and easy.
not short, but a great story. I grew up, born and raised in Nashville, just with a love for the South and cowboys, like so many young boys, do. And I'm still just a sucker for the Westerns. Great book there. Not too bad an HBO series as well. It's a couple decades aged, but fond memories with that saga. And then on the movie front, I was recently talking with a friend about Blade Runner 2049 with Ryan Gosling. Is just a great story, great writing. It's beautiful to look at as well. I think it won Best Cinematography. So those are a couple of my disparate areas where I like to nerd out. So,
all right. Well, we appreciate the recommendations across the board. So thanks, guys. Thanks for being here, and thanks for talking through the Amazon and grocery model for us.
Thank you, Josh.
Thank you, sir.